Hi, I'm Marcus Coulson, founding partner of Champion Vision Partners, and you're watching Take It Stock.
2 minutes to the close here on Wall Street on this Friday, April 24th. All-time highs for the S&P 500 and the tech-heavy NASDAQ this after the DOJ dropping its investigation into Jerome Powell and reports of a new round of peace talks in Pakistan the next few days, moving equities higher into the close. Peter Tuchman joins us to kick things off at session highs into the weekend. Vibes seem high. What's going on?
Look, I think it's just everyone is completely disengaged the war at this point. They started, as I've told you before, they have so much PTSD from being underinvested last year. 2 weeks ago, 3 weeks ago, they started buying it. They put together a shopping list, and they're buying everything that's on discount. And they're not stopping. I mean, these are record highs. It's good, solid volume. I mean, I'm getting nothing but buy programs all day long.
How do you position for next week? Earnings, we got Fed Day, we got PCE inflation.
It will be a pleasure. It will be a pleasure to start engaging things other than the war, to have something to bite into.
Right.
Earnings are going to be hard to predict, right? Fed is going to also be hard to predict. So there are some unknowns, but it seems the market's comfortable buying it at these levels. So it's just it may be a rational enthusiasm, but there's no question it's a lot of enthusiasm.
We're getting used to this, saying all-time highs, all-time. You got to work on those 8,000.
Yeah, but think about it. I'm all ready. I got a whole wardrobe of stuff.
I'm sure you're ready to go. The Einstein of Wall Street. Nice to see you, my friend. Thank you for being
great
here.
weekend.
Skylar, grab your
Happy
microphone.
trading.
The team from Sealed Air here at the New York Stock Exchange set to do the honors. We got more on the other side of the closing bell with Jay Woods. Time for the close. There you have it, another round of all-time highs for the S&P 500 as well as for the tech-heavy NASDAQ. A little bit of divergence, however, with the Dow. Goldman and Caterpillar, of course, Goldman Sachs and Caterpillar, the most weighted names in the Dow. They're both down for the day. Helps explain why the Dow is down and the S&P at record highs. Final tail of the tape, the S&P up 0.8, the Dow down fractionally. The New York Stock Exchange Composite Index down 0.08%, and the small caps up 0.4. NVIDIA, Amazon, Salesforce, those are your Dow strongest names, your Dow laggards. Merck, Walmart, as well as Amex. Let's bring in the great Jay Woods, Chief Market Strategist at Freedom Capital Markets. Dude, I'm going to let you take this wherever you want, but kind of a disconnect here between where oil... Look at WTI and Brent.
Yeah.
Split in kind of different directions, but investors shaking it off for the S&P.
Yeah, without a doubt. The investors are focused on one thing. It's the tech trade right now. Technology is back, and that's the leadership you want in a bull market. But when you look at the overall indexes, why are they making new highs? Because technology makes up the majority of those indexes. So while energy stocks continue to tread water, hold on to those gains, it hasn't translated to the rest of the economy the trepidation we feel when we go pump up that gas tank of ours. I know, I mean, you may be electric, JD, but I go through a lot of gas a week, and it's not
like
fun.
$45
every time I fill up and growing. So as this goes on, it will have an impact on the consumer. Right now, earnings season is not showing that, and we're not getting a lot of companies too concerned about it at this time. I'm concerned, but right now, market is shrugging it off, and we're focused on earnings, and we got a ton of them next week.
And you like to see, when you talk leadership, you want to see the generals at the front of the pack. The Mag 7 having a very strong tape today. There's an interesting phenomenon going on with tech. What's old is new again. Dell, Ripon, Cisco, eBay, Intel.
Yeah.
Huge story of the day. I forgot what year it is when I see these names outperforming, especially Intel today. What'd you see there?
I had great hair when those stocks were back in vogue. Did Compact Computer come back too? I missed that one.
Check that chart.
Did not. What am I seeing? No, I'm seeing, as you said, the generals lead. And Intel, ever since they did that deal where the government backed them by, buying 20% of their shares at $20 a share, by the way, companies have seemed to say, hey, we might want to give Intel some business. So it's been a great thing for them. Today they announced a possible partnership with Elon Musk. What that is, we're still not so sure about, but Intel hitting it on all cylinders, strong demand, and that is in part because, hey, look, the government's in business with them. Other people want to be in business with them as well. So the rest of the technology, it's semiconductors, it's hardware. That's base doing remarkable. Software still verdict out there. That's why Microsoft's going to be so crucial to watch when they report Wednesday after the bell.
How do you think about those earnings? Let's talk a little bit more about them. We got Microsoft,
Yep.
Amazon, Meta, Alphabet. We got some defensives like Coca-Cola.
Yep.
Healthcare names, we got Merck and Lilly reporting next
Yeah.
week. And you
Humana
got the
too,
top
yeah.
dog in the Dow,
Yep.
which ironically is Caterpillar.
The top
So
dog is Cat, yes.
Yeah, here you go.
I know,
So,
that's
yeah,
great.
you like that one?
I'm gonna use that.
Use it in
All
the
right.
newsletter if you want.
Yeah.
How do you approach a week like this? This is the big one.
Yeah, this is our Super Bowl, so I won't sleep all weekend. I'll be just going through charts, studying, a lot of no-dos, but no. How do we approach it like we approach any normal earnings? The beat, okay, we expect them to beat. What is the guide? What are the headwinds that these companies see? We've seen companies, Meta, beat last year. It went up 10% the day after they beat, and then it faded. So is sentiment going to follow what we see as good earnings now, or are people too concerned about what may be? In the semiconductor space, they still see that growth. In some of these other names, Meta ad spend, is it going down? AI, is that story? Are they spending too much? So we're going to look at CapEx spending. We're going to look at future growth. And in the software, we're still in a major story. The story of the year, forget Iran for a second, which is hard to do, but AI is eating a lot of these AI software companies because they're replicating those products that they were so revolutionary for. You look at a ServiceNow, you look at an Adobe, Unity Software, these stocks have not come back. Microsoft may be able to lead the way, but ServiceNow is telling this week, and I don't know if we're going to see all these stocks come back. And maybe 20 years they will, as you mentioned, Dell making new highs and all these old school
Unbelievable.
eBay back. I didn't even see eBay.
eBay
back.
chart is up
Yeah.
and to the right. We'll talk about that much more. Good luck studying your charts. I hope you watch Sixers Celtics. You got a lot of good stuff as a Philly
Sixers
sports
Celtics.
fan.
Oh,
right
you
now.
got Flyers.
You got
3-0 on
Flyers,
the
Pens.
Penguins. Yeah, and I may even bet on them on the poly
The
market.
Broad
You
Street
know.
Bullies. They still call them the Bullies?
I just follow Gritty. He's the
There you
coolest
go.
mascot outside the Philly Fanatic, and we go with that.
Thank you for being here.
Always pleasure. Happy Friday. Have a great weekend. Happy Arbor Day, everybody.
Oh,
Happy Arbor Day.
we needed that one. Jay Woods,
Jay
thank you for
Woods on
taking us
Arbor
off.
Day. We
Skylar,
will.
grab your mic. More than 70, speaking of the Philadelphia Flyers, more than $70 million in total trade volume up on Polymarket to answer the question, who will be the Stanley Cup champion? The best team in hockey, the Colorado Avalanche. The only team with 55 wins in the regular season, 25% odds to take it home this year. 20% Carolina Hurricanes, currently holding on to a 3-0 series lead over Ottawa. 11% the Lightning, currently tied up against the Habs. 7% only Connor McDavid and the Edmonton Oilers finally win it this year. That would be their third trip to the Stanley Cup Finals in a row. 7% for Vegas and the Buffalo Sabres. What a story that has been. And 4% odds that Jay Woods' favorite Philadelphia Flyers hoist Lord Stanley Cup in just a few weeks' time. The playoffs continue tonight. The Stanley Cup Finals will begin in early June. We'll take a look at one notable that calls the New York Stock Exchange at home. What a tape for Shake Shack today. Ticker symbol SHAK, up about 5.5%. Guggenheim initiating coverage on the stock as a buy, saying it sees profit growth for the burger chain. 120 price target. Shake Shack shares up 24% since the start of 2026. Yesterday here at the New York Stock Exchange on the J.D. Durkin Show, we spoke with J.C. Peretz, the one and only of Trend Labs. We talked small cap breakouts, old school Dow theory, and much more. Take a look. JC, small caps just breaking a multi-year base. You see this as a true breakout, shorts getting run over, or something else?
All of the above. Last summer, you had the highest short interest by asset managers in the futures market ever in the small cap Russell 2000. And so, of course, they were at an extreme level in one direction, you get that massive squeeze. Okay, so we've been in the camp that small caps are going to break out of this multi-year base, and this is real, right? And so we've been buying biotechs, a lot of natural resource companies over the last year, metals and things like that live in the small cap space, regional banks acting well, mid caps financials acting well, like small cap technology has been acting well, making new highs like 5 weeks in a row now, 6 weeks in a row, something like that. Small cap industrials have been a leader for years before the major indexes like the Russell 2000 has been able to break out. And now we've seen that, right? So we've been in the camp that ultimately it's going to make its move. And so this recent retest that we saw over the last couple of months was exactly that. It was a kickback. It was a retest. So the question was, is this a retest and now we get going, or is this going to be one of the greatest whipsaws of all time? We've been in the camp that this is a kickback that gets us going. And I think that's exactly what we're seeing.
On to chart 2 we go. JC, momentum in small caps appears to be giving you confirmation right now. Does it tell you that the move has legs? And what do you see in a chart like this?
Historically, it does when the stocks showing momentum are doing well, and it's a pretty diversified group. When you're looking at financials, industrials, technology, it's not like one group that's specifically driving this. And then I would point to the small cap financials that I got to tell you, JD, if the small cap financials are breaking out of a 7-8 year base to new all-time highs, is that evidence of risk aversion for equities? You know, historically it is not. And when you see things like European banks, for example, already making new all-time highs, to think that, you know, there's precedent already for small cap financials here in the United States to continue that upward trajectory. And that tends to be, you know, we don't have bull markets without banks, JD. It's just what it is.
Don't have bull markets without banks. That brings us to chart 3, small cap tech versus broader small caps. You allude to it there. Small cap tech is leading. What does that say about where risk appetite in general is right now, JC?
Dude, 5-6 weeks in a row, small cap technologies up. People are like, oh, tech stocks are crashing. I'm like, which ones are crashing? Small cap tech has been making all-time highs. Mid cap tech has been making all-time highs. Equally weighted large cap tech has been making all-time highs. Semiconductors all-time highs. Hardware stocks all-time highs. It was just the software, right? It was just the software. And this is one of the many examples. I just gave you a list. This is just one of the many. So you're seeing outperformance in technology at the small cap level. And then remember this, when you go back and you look at every bull market ever in the history of the United States and of America, back 100 years, what are you going to see? Technology is a leader and an outperformer in almost all of them, right? So what you're seeing here is perfectly normal.
If Supervisor Dan, the producers can hear me, let's jump ahead to chart 7 from Mr. Peretz. Dow Transports, a long-term base break here, JC. Those that make, those that take. We love old school Dow theory. This looks like a massive base break. How powerful are these in terms of long-term setups?
I mean, totally, man. I mean, this is the oldest index. This is the OG, right? Like all these Johnny-come-lately indexes, like all started from this one. It was a group of railroads. I think it was like 11 of them in 1886. These were the companies that delivered the goods. If people are moving things around and people are delivering goods, like somebody's got to be doing something out there, right? You know what I'm saying? I mean, hello. So now that ultimately became the transportation index because we have things that are not just railroads. We have all kinds of logistics companies and shippers and railroads and trucks and all kinds of stuff. And so it's a transportation index, but it accomplishes the same thing. Are people moving things around or are they not? And so when the Dow Transportation Average is making new all-time highs, hello, people are moving things around. People are building things. People are doing things. People are movers and shakers, like literally movers and shakers. So, and people are like, oh, it's just Avis because of the short squeeze and Avis and price weighted index, blah, blah, blah. The whining is absurd.
Welcome back to the show. This is the Friday edition of Taking Stock. Our good friend John D'Agostino, he's JD1, I am JD2, head of strategy at Coinbase Institutional, joins us now. My man, let me get your take on crypto price action. We're looking at the chart here for Bitcoin, holding on 77,605. Little bit of an uptrend. What are you seeing on resistance for BTC?
Well, it's always great to be here with the best closer in the business. So it's been about 2 months since we've seen each other. Pretty exciting 2 months. We've seen Bitcoin trading in the low 60s up to the high 70s. For me, the more interesting story is the market structure and the volatility. So in that time period, we've seen Bitcoin with a vol of about 2% standard deviation. Compare that to the S&P 500 of about 17, 18, the QQQ about 20, and gold at about 22. So we're seeing Bitcoin less volatile than the other asset classes, less volatile than New York City weather, and way more downside protection than the Mets.
What is oh, dude, that's a Mets finally won a game this
know.
week. It took them a long time.
Yeah.
I'd say the S&P 500 rose 8% in between Mets victories. That's how long it actually took. It was the better part of 2 weeks. ETF inflows, what are you seeing so far relative to previous highs and general interest in the ETF adjacent space?
Again, you're just our lucky stars. For these past 2 months, we've seen about $3.7 to $3.8 billion of net inflows into ETFs. Okay. Some of that coming from the big players, BlackRock and others. Morgan Stanley announced their ETF launch, which is just fantastic. Coinbase is a custodian for that. We now have this thundering herd of 16,000 new brokers running around being able to sell this asset. Remember, I've said this before on your show, the Bitcoin ETF was the best performing ETF of all time, and until very recently, it was not allowed to be proactively sold. Had to all be incoming. That's extraordinary.
What are you seeing in terms of general liquidation, short squeeze conversations? Obviously, we're well off that kind of now infamous event wrapped around October 10th of 2025 or so, but we're not entirely out of the woods, maybe, on that general conversation.
So you don't want to see markets recover based purely on short squeezes, right? That's sort of an unhealthy market structure. So for sure, the first couple of weeks, that was what happened. What we're seeing now, though, is good non-leveraged, long-only spot buying through the ETFs, through the, we call them the OGs, the old guards who used to hold, the old bros who used to hold Bitcoin in the beginning. They're now buying back again. So what you don't want to see in a market recovery, you don't want to see sporadic buying fueled by leverage and fear. That was certainly the case in the first couple of weeks, but now we're seeing very, very solid inflows from the ETFs and from retail.
I mean, the Bitcoin itself has been relatively range-bound here now for several months. It kind of came down. It's been waffling back and forth between support and resistance.
Yeah.
Clarity Act, is it that or some other big picture catalyst that you think finally moves it out of this range? It's been kind of stuck in for a bit.
It's a great point, and look, and the price handle means that the handle, to use technical jargon, right, to get to go from 70 to 80 is that move, that price handle of 7 to 8. It's really, really, really important. Right? What do price charts and coffee mugs have in common? Handles matter. Now they handle from a technical point. They matter from a technical point of view. It's a bad one.
No, it's a good one. I love it.
They matter from a technical point of view. They matter from a psychological point of view. But JD, what they really matter is that the average short-term Bitcoin holder is his or her cost basis is about 80,000. So it's a good psychological uplift if you get above your cost basis. So, I think clarity is going to pass. I'm optimistic. I think we're going to do what's right for this country and right for the consumer. But I don't think Bitcoin actually needs a catalyst. I think the market structure is there. I think clarity would be just a rocket ship that would add on to it.
You talk about the psychological level of these handles. The high for Bitcoin, multi-month high, was just yesterday, 79,500. These things, they always know where to go to and not to cross that threshold a little bit more.
They tease you, but then and then they pull back. But I'm very, very optimistic.
The great John D'Agostino. Come back and see us anytime. Happy Friday. Have a good weekend.
Always.
See you again soon. My man, much more Taking Stock coming up after this. Welcome back to the show. Just yesterday, FinTech TV's very own lead anchor, Remy Blair, sat down with James Mond of Crane Shares to discuss the Abu Dhabi Exchange ETF suite. Take a look.
Well, the geopolitical spotlight remains on the ongoing conflict between the U.S. and Iran, and the UAE continues to cement its status as a global financial fortress. Now, despite the regional chaos, capitals pouring into Abu Dhabi, and in March alone, the Abu Dhabi Securities Exchange saw a staggering 183% spike in ETF trading value. Now, to meet this demand, CraneShares is now cross-listing two major ETFs from the New York Stock Exchange onto the ADX, and the AGIX fund will offer Middle Eastern investors direct exposure to AI, including private shares of SpaceX and Anthropic. And the KWIN fund will deliver a Sharia-compliant alternative income strategy. Well, joining us here at the New York Stock Exchange to discuss these new offerings and why the UAE remains an economic powerhouse is James Mond, who's head of capital markets at CraneShares. James, welcome. Thank you so much for joining me.
Thank you, Remy. I'm very happy to be here.
Well, every day we do continue to monitor headlines coming out from the Middle East, but in terms of the landscape, in terms of investing in the UAE, tell us what's happening.
So the UAE is really becoming a global hub for finance, and we're seeing that in a number of ways. Most relevant for us has been the Abu Dhabi listing of a few of our more successful US ETFs, which allows us to bring the global liquidity profile and innovation that we're seeing in the US market to the local region in the UAE.
And I want to ask you about both of those funds, the AGIX as well as KWIN. So here on Wall Street, of course, we're awaiting major mega IPOs in 2026. But first, tell us how AGIX works.
Sure, AGIX is a public-private combination, so it's majority public exposures, as you'd see in most ETFs, but we also have a private sleeve, so we were able to obtain exposure to XAI, now SpaceX, and Anthropic via private allocation. We are on the cap table for both of those companies, so we have a healthy mix of the two, allowing investors that access for the first time in a US-listed ETF.
And moving on to the KWIN ETF, that offering is an option-based income strategy that adheres to Islamic investment principles here. So tell us about this fund.
It's an innovative income strategy. We partnered with Wahed Capital, which is a leader in the Islamic investing space, to bring this strategy to Sharia-compliant investors for the first time. In Sharia financial constructs, traditional cash investments are not available. So having this options-based strategy where we overlay combinations of options on a basket of Sharia-compliant large-cap U.S. equities provides that unique income opportunity in a Sharia-compliant way for the first time ever for global investors.
Yeah, and James, while I have you here, the ADX saw a 183% year-over-year spike in ETF trading last month. So what's behind this demand?
So the growth in ETF listings on ADX and just the interest in ETFs has really grown at a rapid pace. It's only in the fourth quarter of last year that we saw the first US ETF cross-listed on ADX, but now we're seeing more listings and more interest from global issuers. So I'd expect to see that trend continue, as phenomenal as those numbers are, 180% growth. The region is growing so rapidly, and interest in ETFs specifically is growing so rapidly that number doesn't come as much of a surprise, to be honest with you.
And finally, James, before I let you go, do you think Abu Dhabi is positioning itself to rival, say, New York or London when it comes to the premier cross-listing destination for global issuers?
I really do. I was in Abu Dhabi myself in December, and it was so impressive to see the level of engagement from exchanges, regulators, local business leaders, and the global financial community in Abu Dhabi. They've really opened their arms to global investment and global investors, and I think we're going to see this trend continue over the coming years, where Abu Dhabi really does become a global financial hub to rival New York, London, Hong Kong.
Well, James, it was great having you here. Thank you so much for joining us today, and I appreciate all of your insights as well as perspective.
Thank you, Remy. Have a great day.
Welcome back to the show. And now Money 2020's very own Scarlett Sieber and Tina Lunkar discuss their top takeaways from Money 2020 Asia in Bangkok, which wrapped up yesterday. Take a look.
My name is Tina Lonkarik. I'm Global Director of Public Relations at Money 2020. It is day 2 and we are live at Money 2020 Asia in Bangkok. Scarlett, our Chief Strategy and Growth Officer, we have seen so many things during these 2 days. It's been a packed 2 days. What are the trends that you're seeing on the floor?
Well, first of all, you can feel the energy in the room, Tina. It is so exciting. We've grown this year by over 30%. We have 87 countries in the building, which is amazing. Not surprisingly, one of the things that's so amazing about Asia is just the diversity of the different geographies coming together. Cross-border payments, very hot, of course. Stable coins, the talk of the town, and then you cannot be at a show right now and not be talking about AI. But what I loved about what we've seen over the last 2 days is the conversation shifted from, is this a thing? What are we thinking about this? To how do we govern it? What does accountability look like? What does the role that ethics play into this? And then let's talk about scale and impact, not just micropilots, basically.
We had 2 days of closed-door roundtable sessions with over 80 regulators from all across Asia. Scarlett, what were the takeaways?
There were so many amazing things. I mean, one of the things that's really unique about our industry is this kind of convergence of different areas. And you could have the best technology in the world, but it might not do much if you don't have the regulation and the regulation doesn't keep up alongside it. So we brought with Policy 20 the private sector and the public sector together and really just talked about how do we do this together in a more meaningful, scalable way.
And we also had a fantastic press launch yesterday with multiple announcements from the biggest players in the industry. Scarlett, share some of the announcements that were presented yesterday.
Of course, and as you know, Tina, one of the things about Money 2020 is we are the place where money does business. That's really important to us. But people also utilize our platform to really shape this industry and move markets. And so we are built on partnerships. This is a complex ecosystem. Partnerships is what really accelerate that growth. And not surprisingly, the press launch really doubled down on that. We had Lian Global making a partnership with USI out of Europe, which is great because that really shows the cross-continent collaboration. We had MoneyPoint's president make a big announcement as well. We had dLocal announcing stablecoins. So stablecoins and tokenization are absolutely talk of the town.
And we also have a new stage this year. We have a couple of new stages, but there's one stage called the intersection, which is all about the intersection between traditional finance and decentralized finance. Scarlett, tell us more about this great initiatives.
Well, of course. I mean, one of the things that we really look for signals here at Money 2020, and I spent a lot of time with the team thinking and talking about that. And so last year we started seeing, especially in Asia, more of a desire and interest in really expanding the ideas around decentralized finance. And so we doubled down on that. We created an entire space where we wrote a book about it, really around the convergence of TradFi, DeFi, and we see so many areas from both sides, both the decentralized and TradFi, coming here and having conversations.
And startups are very important. We hosted a startup media session yesterday, sharing with the media 5 incredible startups that are launching their products and solutions. We also have a startup innovation park here that has been bustling the last couple of days.
It's a lot of fun.
A lot of fun. We can't wait for day 3. Another very busy day is coming tomorrow.
It is.
So thank you, Scarlett. Thank you so much.
Thank you.
Next week here on Wall Street, quarterly results from Microsoft, Amazon, Meta, Alphabet, as well as Apple, plus Fed Day with Jerome Powell on Wednesday. Thank you for watching today's edition of Taking Stock. Have a great weekend. We'll see you again on Monday.